Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. After a modest show in 2022, 2023 turned out to be a year of India. As the bulls took to the fast lane on Dalal Street and drove the benchmark indices, the Nifty and the Sensex to never before seen levels. On a year-to-date basis, the Nifty 50 has gained about 18% in trade. The Sensex is up 17%, driven by robust inflows from both domestic and the foreign investors as well. Now, this comes on the back of heightened uncertainty when it comes to global growth, geopolitical tensions, rate hikes, skyrocketing inflation, you name it. Now, the big question then is, as we approach the new year, how should investors be prepared? What is the outlook on the Nifty and Sensex? Where exactly will people make money when it comes to stock markets in the new year? To answer all of these questions and much more, I'm now joined by a very, very special guest. On the show with me is now Dhiraj Relli, MD and CEO of HDFC Securities. Welcome, Dhiraj, and thank you so much for taking the time out. It's such a wonderful time to host you, especially when you yourself at the company have taken out a report on the rewind and relooked at what has gone by in 2023 and what's the outlook on 2024. What is this feeling that you get as far as the markets are concerned?
Thank you for having me, Sakshi. I think we've had a stellar year in the 2023 for the equity markets. Not only Nifty and Sensex, but also mid cap and small cap have performed really well. And the good thing is that this is the first time, I have seen retail investors making money. So that's a very good and positive feeling for the investing community at large, that seeing that in retail investors, HNIs making money, because we've crossed really many walls of worries in the last calendar year. We've had a very difficult macro environment when it comes to global macro environment, where we were grappling with the inflation and also a lot of geopolitical uncertainties around the Russia-Ukraine war, or at the last quarter of the year, we are still witnessing war between Israel and Hamas and so on. So we have crossed many walls of worries, and there we are in now, almost at the fag end of 2023 and approaching 2024. So we are actually approaching 2024 with even more positive environment. So the overarching theme or a worry for most of the investors in 2023 was that how to deal with the inflation. And we've seen that how with the synchronized action by central bankers, we have almost, able to deal with the inflation. We are fag end of this problem. We are may not be yet out of the woods, but we are by and large done with the inflation as a problem. And 2024 is looking to be a better year, where we will have, tapering in terms of inflation, and also expecting rate cuts from almost all central bankers, including Fed and RBI. So that is a big thing. And another thing on which is very positive, which has turned out to be a positive event for markets and India at large, is that we've seen the outcome of state elections, and incumbent party that is ruling India has been able to win 3 states out of 4 with thumping majority, and that has actually increased the possibility of them winning the general election in 2024. And markets do not like uncertainties, so that uncertainty out of the question, and geopolitical environment also looking congenial. We are bullish. We are hoping that 2024 also will be a good year for India at large.
Sure.
Yeah.
Absolutely. So that's, setting the context right as to where are we at and, where are we looking forward to. But, Dheeraj, we've been spoiled for choice with the kind of massive gains that we've seen in such a short span of time. In just the last 2 months, or the Nifty's ran up 2,500 points as well. Is the best now behind us of the bull run that we have been witnessing?
I don't think so, Sakshi, that the best is behind us, because from the current level of Nifty, where we are close to 21,500 levels, almost we close today at all-time high levels. So from there on also we see a good 10% upside, so another 2,500 odd points rally in Nifty is possible. Yes, it comes with the caveat that we have seen exuberance in the mid caps and small caps, and there we see valuations are a bit more stretched. But when it comes to the Nifty or Sensex, we believe that we still have a good 10% upside. It could be front loaded also. So
Hmm.
what will happen that, in next 4 5 months only, we may probably approaching the big event of general election, we may get
Yes.
into these kind of levels only. Yeah. So
Okay,
that's
but
why.
but what would you say to all those concerns that are now floating around, that we are now overstretched, the markets are looking overheated, valuations? How would you look at that?
So there are pockets that are overheated for sure. I think the pockets like IPOs and particularly SME IPOs, I would humbly caution all the viewers that be very very selective when you are looking forward to apply in these IPOs, because if they are not well researched, particularly SME IPOs, and some of the IPOs may not be appropriately priced also. So there is a euphoria. Many investors have invested and gained 50% or more also, even at the list as listing gains or also post listing gain. We've seen how IRIDA in particularly from 32 reached to 120 or so. So, but our suggestion is that be very selective in the IPOs, SME IPOs, and definitely in the mid cap and small caps where we have seen valuations are run ahead the fundamentals. There one has to be really cautious. So this is the time to go for large caps. This is the time to go for a quality. I can tell you, Sakshi, at this juncture, the whole market participants are finding hard to get good value for a very good company. So fair value and good companies is a very rare combo to discover at this stage. But yes, there are still opportunities in the market when it comes to large cap stocks.
Okay. You talked about that we still have a long way to go, and, we could be seeing somewhere around 10% kind of a rally from here on. But what will drive this next leg of the rally? We've seen, of course, the Fed pivot, the recent state elections outcome, definitely supporting the recent rally. But in the next leg of rally, will it be FOMO? Will it be the TINA factor? Will it be the policies from the government or the earnings? What exactly are you betting big on?
I think first and foremost, I think it's all about the earnings. There are various multi-decadal themes that are playing out in India. When we live in India and we look all these things happening, sometimes we undervalue some of these changes happening. We are seeing formalization of economy. We are seeing digitization of our country. We are also seeing financialization of savings. So a combination of all these things and focus on renewables is really our multi-decadal changes, and particularly some of the initiatives taken by the government that like Make in India or PLI, all that, a culmination of all these economic, political, and society level changes are actually going to drive the market. So it's not one factor, it's a culmination of multiple factors.
Do you also see any potential risks to the current bull run? If at all, what could be one or two major headwinds that could stall the momentum that we are in?
Yeah, if we still have some negative news around crude prices going haywire, that could be one hindrance. The other could be, and that would add to a problem of inflation if rate cuts for some reasons gets delayed at US level, or we and probably other central banks will also toe the line. And if we see that the rate cuts are not coming in hurry, or they are not coming, that can be a big challenge for the market. But if I look at domestic factors, I think we are well positioned. A setback in elections, of course, can create a really havoc in the market.
Right. Another major move that supported the market sentiments thus far in this year was the consistent domestic institutional investors inflows that were undeterred by the FII staying on the edge, and by far at least away from for the first half of the entire calendar year too. FDI surpassed DFI flows by a wide margin. Do you think this is going to be a structural trend even going forward from here, and what would see this trend continuing?
Yes, absolutely. Because, still equity as a percentage of the overall assets is still a very small, low digit kind of a levels of penetration. So from that point of view, we have still significant upside from the domestic flows coming in the market. And there, in last 2 decades or so, we've seen tremendous maturity among the retail investors and ultra HNI investors. They've understood the various cycles of the market. They've seen cycles of the market, and also now with the advent of social media, media like you, who are giving them good insights and who are really helping them to navigate their journey to invest in the equity market. That is something playing out very, very well. I know there are some influencers who are not registered with the SEBI, and that's where there is some concern coming in from all market participants. But if we leave that aside, I think the overall the ecosystem is right for investors to allocate more funds for the equity. So domestic flows are here to stay. I think the one good thing is that if domestic flows are coupled with the FPI's flows also, which we are witnessing from last 2 months, we've seen positive flows from in the month of November, and in last first 15 days of December, we've got a 5.5 billion kind of flows from FPIs. If both can combine, then this will be a good recipe for a upside in the market. So domestic flows are here to stay. I don't think so. It's a TINA factor because debt is also an attractive option at this stage. TINA factor was there in the market long ago. At this stage, when we see you can get to invest in even Government of India securities and can get 7% plus kind of returns, I think that's also an attractive asset class. And at some stage, money will flow into the other asset classes as well.
Okay. You were talking about slight caution that you wanted all the investors to have when it comes to the IPO frenzy and the euphoria we are seeing. The other pocket that you mentioned earlier, the mid and the small caps, the stupendous outperformance that we have seen in 2023, they were the darlings of the D Street. Both the indices up about 35 odd percent. How should one investor play this space in 2024? Will the outperformance continue, or do you see a shift of money now to the large caps in 2024?
So one theme that is coming out consistently as a consensus theme for 2024, that 2024 we will have more upside coming in from the large cap stocks and not as much as small cap or mid cap as a category. Why?
Okay.
Because small cap and mid cap have done really well, and valuations are rich in most of the sectors and most of the companies. Whereas when we look at the large caps, their earning growths have been good, but their valuations are reasonable. So that's where we see some shift will happen. And whenever markets are at all-time high level, I think all advisors, all good brokerage houses do cautiously advise their investors also to take out some profits and move money into the more safer haven within. If you want to stay invested in the equity as an asset class, move it to the large cap companies, some of the low beta companies, so that in case there is a correction in the market attributed to some unprecedented reasons, at least you will be able to protect your downside to a large extent. So this is a consensus theme, and I am very quite hopeful that this will play out.
Fair enough. All right. So far, Mr. Relli, it was all the easy questions, but now comes the difficult part of this interview as well. One, what is the outlook on Nifty and Sensex for the entire year 2024? What are the targets that you're going with?
I think we are going with an upside of 10 to 15%. We are not seeing significant upside here. Same will be true for almost mid cap and small cap also. We'll see an upside, but close to 10% kind of when we look at the index at large. However, this year, 2024, is going to be a year for stock selection, and it will be a delight for stock pickers. And that's where the real edge lies. One, I can tell you in each sector, there are still opportunities to pick up the good companies at fair valuations, and that's where we are focusing. See, it's not,
Okay.
when media generally asks the questions on what's your view on the markets, nobody owns full market, nobody owns full
Yeah,
sector also.
that's
Yeah,
true.
yes.
Very true. So I'll come to the stocks, but before that, top three themes or sectors that you're betting big on for the new year.
Banks have not done anything. I think couple of PSU, other than the couple of PSU banks, so banks, NBFCs, total BFSI space have been lackluster in terms of performance as compared to the other sectors. So we are betting big on the BFSI theme. Within that, also banks, and within that, both private sector banks, large private sector banks, as well as PSU banks will continue because see, here we need to see this is a structural shift. We have recognized almost all possible bad assets. Credit growth is picking up. Private capex is coming, and we are seeing that the asset quality has also improved. Most of the banks in India are also well capitalized. So you can't have a better, recipe in place to take the advantage of the markets. I believe that banks will have a good earning growth, and it would reflect in their prices as well. Other
Okay.
than that, also we believe that industrials will continue to do well. India is an infrastructure deficit country, so that's one space we are bullish on. There are pockets in the auto, there are pockets in pharma, there are pockets in the technology side. We moved from negative to neutral stand in technology. Those technology companies are still not out of the woods, and I can tell you it may take 1 or 2 more quarter, but it is good time to start looking at some of the good IT companies because when rates cuts will happen uh, there'll be more spent from the large companies on digital and IT side. That's when we will see that the margins and growth will be back in the IT sector as well.
Okay, fair enough. Apart from the sectors now, when it comes to the sectors that you want to avoid, are there any particular sectors that have run up too much and you want to stay away from?
Yeah, so I think consumer is one space where we feel that the valuations are rich. Volume growths are not coming because of the low commodity prices. They could able to ride on the margin expansion wave, and also to some extent for the some of these companies there was a pent up demand also was there in last couple of years. But from here onwards, we feel consumption is one space where we feel that one can avoid.
Okay,
You can be very, very selective. Even in the discretionary space, also, we feel there is some more time one can wait and watch in the consumer discretionary space also.
okay,
Real estate will do well. Chemicals, has a lot more dependence on China and activities around. So we believe that one can wait in the chemical sector and watch it for another 2 quarters and then take a call.
sure.
Pockets of cements are also looking good for us.
Okay. Yeah, apart from the sectors, when it comes to stocks, you do say that, in 2024, it's going to be a stock picker's market. One will have to really bet big on some stocks from select sectors. How would you be advising top 5 or 6 stocks that you advise for 2024 one can go ahead and accumulate?
I think there are 10 stocks we have identified which one can accumulate over a period of 2024. You may
Okay.
not put in all your money in these 10 stocks immediately. I think the best way is to stagger it over a period of next few months and invest in these stocks. I'll just name these stocks for you: Infosys, Axis Bank, Gale, Adani Ports, JSW Steel, Grasim, Bajaj Finserv, InfoEdge, and Pidilite. So these are the
Okay.
10 names that we have picked up. We believe that these are good companies at fair valuation. One can look at, and we have looked at, companies from different sectors. So these are cherry picked names that can help customer to create a very good portfolio.
Okay. And what is the kind of return that you're expecting? A ballpark, if you can give a broad range of what is the expectation on these stocks?
Most of these stocks, in terms of our target prices, have a high teens kind of a return from here onwards. So I think one can expect anywhere between 15 to 20% kind of a returns. And again, these returns can be front loaded also. So,
Fair enough.
you may not need to wait for the end of the 2024 to get these kind of returns.
Wonderful, and that will be cherry on the cake as well. Well, it's always a pleasure speaking to you, Dhiraj, and having you with us on Business Today Television. Some wise words coming in right there from Mr. Relli on how to approach the markets in 2024. Where is the smart money going to flow into? The strategies that you as investors should adopt, and the top 10 stocks that he's pointed out as well. So do take all of these notes back. Watch this interview on a repeat to really understand and get a better hang of what is the correct strategy or approach to the markets that you should have in the new year. And with that, season's greetings to you, Dhiraj. Thanks a lot for joining us.
Thank you, Sakshi, and season's greeting to you and your viewers. Thank you.
Thank you. All right, and with that, we will wrap up this very special conversation, but do stay tuned on to Business Today TV. As on the other side, the news and information continues from the world of business and stock markets.
Southern Tamil Nadu is reeling under rain fury. Torrential rainfall in many parts of the state have led to massive waterlogging.